JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 17th of December 2020. So yeah, welcome everyone. Welcome to this Thursday's morning session where we're going to have a very quick look at the markets, a few of the charts, some of the charts that we looked at yesterday just to see how everything's getting along. But yeah, as always, before we do that, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos. And of course, our JFD Bank website and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. So now then, jumping into the charts again, quick update on Nikkei. Still waiting. Still, I mean, for the whole week, I kept on talking about this idea that I'm waiting for that pop above the 26,890 zone in order to get a little bit more excited with the upside. So far, I mean, we're not really getting that. We're just kind of oscillating here, and we're just kind of moving sideways. Stuck in this little range, but on the other hand, I mean, on a little bit of a positive note here, maybe we could be seeing here a possible kind of ascending triangle pattern here if we draw this upside line from the low of the 8th of December. So again, on the shorter term kind of time frame, you can see this very clearly, but on the daily chart, yep, you can see I mean, it's a small one. Nevertheless, it's quite an interesting one, and of course, according to all the TA rules, these tend to be quite bullish patterns. However, until we get that confirmation break, we cannot really talk about any upside. In terms of the downside, I would need to see a drop below the 26,405 zone before aiming lower. Okay, so now then, jumping into German DAX, and here, look at this beautiful move. Finally, we had a nice pop higher here. The index continued to drive north yesterday, and the most important, it stayed above this 13,460 territory. Now, what I'm going to be aiming for, and this is what I've mentioned to you guys previously, my next target is the highest point of this year, which is roughly around the 13,795 territory. Looking at the cash index right now and where we're currently sitting at, we can see that the price is currently trading near the 13,609 zone. So basically, we are above yesterday's close. So now the big question here is, can we see a nice kind of test of this highest point of this year? And yep, we'll take it from there. But again, for now, guys, the way we can play this one out is, as long as the price remains above this 13,460 territory, yep, we will continue targeting the upside. In terms of this one dropping back below this hurdle, well, I mean, maybe a bit of downside here could be possible, but I'll reevaluate that again later on. For now, I'm just keeping an eye on this. And let me just clear up this chart here a little bit, because one of the main levels as well that I'm keeping an eye on here is this one right here, the 13,233 mark. That's the opening price of this year, guys. So basically, as you can see from this week, after kind of yesterday's push here, not yesterday, sorry, Tuesday's push here to the upside, we are now kind of, and yesterday's continuation further north, we are now trading nicely in the positive zone for the year. Again, let's see how this is going to play out further, guys, but yeah, for now everything's looking quite positive. So let's see if this index manages to stay and close this year in positive territory. Now jumping into FTSE 100, and this one is well, it's everything's kind of according to the plan, because what I was saying to you previously, that although even though we could break this upside line here, yes, it could open the door, potentially could open the door towards lower areas, but that's the reason why I had this level right here, the 64 mark, a break of which could then open door for further declines. But as you can see, that never happened. Instead, the index started reversing back up here again, yep, now it's kind of let's say putting us into this kind of little neutral spot here. First of all, let me get rid of this upside line, no longer valid and needed. Now the main focus will fall on these two levels, the 64 level on the downside, and the 66.41 zone roughly here on the upside, because currently that's the highest point of December. If we get a pop above this, of course this confirms a new high for December, but yep, but then of course we'll be very careful with some other key resistance levels. Now, unlike the German DAX, the FTSE 100 is kind of performing on the weaker side, I would say, this year, because as you can see, for example, if the German DAX is approaching the this year's high already, the FTSE 100 is still struggling with the highest point of March. So basically, yeah, that's kind of a bit of a sad here moment for the buyer, or for the bulls of this index. If you've entered, I mean, if you've started kind of, if you were bullish on this index in the beginning of this year, so yep, you're still probably in the red. However, let's see how all this is going to play out. Of course, again, we do have a bit of trading, a few trading days left in this year, but well, I mean, of course, I doubt that we will have a strong rally here all the way back to these this year's highs. And by the way, the highest point of this year, let me just grab this one very quickly, is right here, guys. And let me just capture this one. There we go. So the 7,690 level, approximately around there, that's the highest point of this year. I mean, well, I doubt that it will reach this area this year. So yeah, it will be a bit of a down year for the FTSE. Now DXY dollar index, so managed to reach the psychological 90 zone. This is what I talked about this in the beginning of this week, guys. If you remember, my next target was that psychological 90 zone, or the 89.96 level, and that level, just a quick refresh, that level is the high of the 12th of April of 2018. So now the big question here is, can we see a further slide? Well, I mean, we could if we see the daily candle remaining below this 89.96 zone. If it does, then yes, of course, my next target is the lowest point of April. Excuse me, lowest point of April of 2018, and that's roughly around the 89.23 level. So let's keep an eye on this one. Of course, we are still trading below some of these downside lines. Of course, for now, the main one I'm keeping an eye on is this short-term one, drawn from the high of the 4th of November, and yeah, we'll take it from there. I mean, as long as this downside line remains intact, the trend is still to the downside. If this downside line gets broken, now that's where it could become a little bit more interesting for some buyers. And now gold, of course, the weaker dollar is working well here for the commodity sector, and gold here, you can see that it's pushing nicely to the upside. It's currently getting close to its December high here, which is around the 1875 territory. Now the big question, can we actually overcome this? Now previously when I looked at gold, I was saying that keep your eyes in the beginning of this week, actually, when I was looking at gold, I was saying to keep an eye on this 1849 level, because if that gets broken, then the next target is the 1860 zone, which if also gets violated, it could open up the path towards the highest point of December, which is around the 1875 level. And so that's where I'm gonna be very very careful because what I don't want to see here is basically a hold up here near this 1875 territory and then a retracement back down, because in other words, something like this could happen. But although let's put it this way, if that happens, if the commodity finds a bit of resistance here, starts declining lower, but if it let's say continues to trade above this 1849 level, then yep, a nice rebound here back to the upside could be possible. And then yes, of course, we'll aim for some higher levels. But if this area gets broken, this 1849 level gets broken, of course this could open the door towards lower areas again. However, in this case right now, we could be seeing maybe a possible range. So basically, if, like I said, if the rate if the price struggles to overcome this 1875 territory right now, then yes, we could see a bit of a retracement here to the downside, where all eyes are going to be on the 1849 level, which if provides support, we could see a nice rebound and a push higher. But if it fails, then we will consider this all this as a potential range here. So, and actually, let me just quickly mark the upper side here of this potential range, because again, I cannot really let's say get confident with this idea yet until we get a rejection from this area. But again, if all this gets broken still, I mean, this of course will confirm a forthcoming higher high, and especially if the daily candle remains above this 1875 territory, then yes, of course, higher levels could be met. Because if we get a break above this, but the daily candle falls back below it, then, well, guess what? A false breakout, basically. Then we will consider maybe this idea of a potential retracement. But like I said, there's a lot to take in on gold right now. A lot of interesting scenarios. So let's see how this is going to play out. Don't rush into anything yet, guys. Like I said, although there is a good chance for this one to pop higher, I would prefer to wait for the daily candle kind of staying above this hurdle first, and then I will aim for some higher levels. Now, silver, quick update here. Silver, of course, is performing a little bit much better, I wanted to say, but much better than gold. Yeah. My next target here is the highest point of November right now, near the 26 territory. I talked about this commodity this week, guys, and I was saying that if we clear up the highest point of December 1st, which is around the 24.86, then we clear up this 25 hurdle, then my next target is the highest point of November, near the 26 territory. For now, that's what I'm going to be aiming for. Now, WTI Oil, here, I mean, look at this beautiful move. And this week I talked about WTI Oil, and I was saying that my next target is this 48.64 level, which is the highest point of March. And look at this beautiful kind of move. So basically, demand is kind of, I would say, okay, back. Oil demand is back to, well, I wouldn't say back to normal, but it's better than it was before. The weaker dollar is also helping here this commodity to drive higher. So like I said, now the main question, can it actually overcome this highest point of March? But to be honest, I'm going to be very careful near this level, because in a way it could provide good resistance, and if it does, a bit of a corrective move here could be possible. So be very careful for now. Yes, like I said, it is pushing nicely to the upside. Of course, the next target will be that psychological $50 mark, but yeah, but before that, actually, oh, sorry, not only the 50 mark, before that, I'm gonna keep an eye on this little level here, and there we go. 49.42 marks the lowest point of February, if I'm not mistaken. No, that's not going to be the lowest point of February. That's going to be near the lows, I would say, near the lows of 4th, 5th, and also 10th and 11th of February. So very strong area of support previously, now it could be seen as a good area of resistance. So keep your eyes on that one, guys. Jumping into Bitcoin, well, if you remember yesterday, I talked about Bitcoin and my trader's tea time, and basically I was saying, guys, to keep your eyes on the upper side of this potential rising channel formation. Well, I mean, yesterday we had a rally here, and the price got held near the upper bound here of this idea that I've mentioned here initially, this pattern. So in a way, kind of it worked out nicely yesterday, but basically today it's kind of breaking this area. So in a way, we can get rid of it. It was a very quick and short-term idea, which, well, to be honest, worked out very quickly. So okay, I'll take that. It's a good achievement. However, now, like I said, now it's a bit of a problem from the other side, because again, on Bitcoin we are in uncharted territory, and basically now to find a potential area of resistance here, now that would be a little bit of a tricky one. But what we can do here is, first of all, let's get rid of this rising channel and let's take a look at the monthly chart here. So the monthly chart looks like this, and we could potentially draw, again, it's a bit of a subjective thing here, I would say, because well, I mean, everybody can view it differently, but nevertheless, I'm gonna try to draw this one here, and you can see that, for example, if we draw the Fibonacci extension, we have managed to overcome this this 1.6180 territory here on the Fibonacci extension. Now the next target potentially could be this 31, the 2.61 extension on the 2.6180 extension on the Fibonacci. However, don't get me wrong, that's quite a bit of a move here. Too much, let's say. It could be too much, but yeah, I mean, this is something for you to keep in mind here. But if we draw this a little bit differently, now let me just grab this one very quickly here. Again, it's all very, like I said, subjective here. I mean, sometimes it does work out nicely, sometimes it doesn't. But if we grab the all-time low here, somewhere from around here, I think it was the all-time low. So assuming this one roughly around there, the previous all-time high here, and grabbing that one and then drawing it from around here. So now this is a little bit more like it, because as you can see, now we're approaching that nice level of 1. So this 100% extension here, and that's roughly around the 23,000 mark. So well, 23,000 and 0.24, but roughly, guys, I mean 23 marks. So that's good. That could be our next target. I'm gonna keep this on the chart. I'm gonna pick up on this one if, like I said, if we do reach that area of the 23 zone, well, that's where it's going to be very interesting to see what it's going to do next, because if it finds good resistance here, maybe a bit of a corrective move lower here could be possible. And sticking to also this crypto here, I mean, look at this previous rally here that we had in November and of 2017, then December. Yeah, I mean, look at this picture here. I mean, now then we're getting this reversal, and then in January of 2018 we got this strong reversal back down. So basically, in a way, I'm not saying that it's going to be, it could be the same thing, I mean, or it's going to be the same thing, but it could be the same thing, because after the year after that, we also we didn't have a huge rally in December. We instead had a summer rally here. Now we're having the winter rally again. So if this drifts lower, and in January starts moving lower, then maybe we'll have in the year of let's put it this way here, this year, in the year of 2022, we might have a summer rally again. Don't get me wrong, that's theory, because that's we cannot really do much here with this crypto, because it's, like I said, we don't have much historic data here. So that's why, just kind of an idea for you guys to keep in mind. So if there is some sort of a cycle here, then, well, I mean, right now we're having this winter rally, then we had a summer rally, and now we're having a winter rally again. So maybe we could expect in 2022 the summer rally. So again, let's see how, of course, if this is going to play out or not. But for now, from the short term, I'm aiming for this. Let me just adjust this very quickly back up here. I'm aiming for that 23 territory, so 23,000 mark. So let's see how this is going to play out. Okay, jumping into a few pairs very quickly before I run out of time, actually, to spend too much time on Bitcoin. But I'll try to fly through these very quickly. So, we looking at this AUDNZD continues to trade nicely above the short-term upside support line, taken from the low of the 2nd of December. We tried yesterday to move higher, but as you can see, it failed. It drifted back below this 200-day EMA, and now it's currently sitting near on the 200-day EMA and the 100-day EMA. So we're kind of really stuck here. In order to aim for some higher levels, guys, I would prefer to wait for a break of this downside line taken from the high of the 18th of August. However, the problem here is that we already had a decent up rally here, up move here. So maybe we could see a bit of a break of this short-term upside line, maybe a bit of a consolidation here, and then maybe another push higher. So again, that's why I'm saying, though, be very careful. If we do get a strong move above this downside line straight away, then, well, I mean, yes, the pair is with the Australian dollar is very strong, but at the moment, let's be very careful. Maybe the New Zealand dollar will strengthen as well. However, looking at this picture, we can see that yes, the Australian dollar for now is the one to watch. But again, like I said, it would be quite interesting to see, of course, this one rallying straight away to the upside, but something kind of tells me that there could be a possibility of breaking the short-term upside line first, maybe consolidating somewhere around here, and then pushing to the upside and breaking this downside line. But again, a bit of speculation, guys. Let's see how this is going to play out. Quick update on AUDCHF. I talked about this one yesterday in my traders tea time. As you can see, yesterday I've mentioned this level here, the 0.6713. We're having a nice break right now, so that's great news. But yeah, wait for that daily candle, guys. I mean, yes, it's pushing higher, but let's not chase the market, and let's see if this is not going to end up being today another false breakout. USD CAD. So here, now this one's a little bit of a difficult one. First of all, let me just probably get rid of some of these lines. But the one line I'm going to stick to still will be this downside line here, taken from the there we go, taken from the high of the 2nd of November. Yes, I mean, it's pushing. It seems that it wants to push lower here. However, keep your eyes on DXY, because if DXY somehow rebounds from that psychological 90 territory, then, well, we could expect maybe USD CAD also moving back to the upside. However, for the upside here, in order to consider higher levels, I would still need to see maybe a break somewhere above this territory right here, above the 1.2793 zone. So be very careful with that one. GBPCHF, also quick update. Talked about this one yesterday in my traders tea time and my morning video as well. So yep, it worked out nicely, but all eyes are going to be now on this 200-day EMA, because if it continues to provide somehow resistance, then we might see a bit of a corrective move here to the downside. So maybe something like this, guys, could be possible. For now, I'll keep this as an idea, as a potential idea, but I'll consider this idea if we continue to struggle, let's say, to move above this 200-day EMA here on the daily chart. So again, be very careful on that one. GBPJPY, looking a little bit more positive, I would say. However, also approaching very important key resistance area right here, guys. So that's the roughly around the 440.31 zone. If we get a break through this one, yes, wonderful. My next target is the current highest point of December, near the 140.70 territory, and then I'll take it from there. But if it struggles to, let's say, overcome this 140.31, maybe we could go for a bit of a corrective move here to the downside. So like I said, we're very close to this key resistance level here. Let's see how this is going to play out. But again, this is the one that I'm watching right now, this 140.31 area, roughly around here. If we get a break above this, yes, I'll aim for that highest point of December, the current highest point of December. But if it fails, let's say, or if it fails to move above this 140.31, then a bit of a corrective move here to the downside could be possible. EURUSD. So finally, look at this beautiful move, 101.2215. We've managed to reach that. Now I need to scroll back and find another potential good area of resistance. So one of the area of resistances could be right here, guys. Let me just grab not this one, but this one right here. That's the highest point of April of 2018. That's roughly around the 1.2414 area. So again, all eyes are going to be on this level today, because if by any chance the daily candle drifts back below this 1.2215 zone, well, I mean, I'm going to consider maybe a bit of a corrective move here to the downside towards this upside line. But if it continues to rally, guys, then yes, keep your eyes on that 1.24 zone, although I do understand it's quite a big one to kind of keep in mind. Maybe let's try to find another good potential area of resistance. So one of them could be right here, the inside swing low of the 12th of April of 2018, and that's roughly around the 1.23 zone. So actually quite a decent level here. This intraday inside swing low of the 12th of April of 2018 near the 1.23 zone. That's what we could start. Not this one. That's what we could be keeping an eye on here, guys. So at the moment, let's see how this is going to play out. For now, everything's looking quite positive. If this upside line gets broken, this is where it could become a little bit more interesting for more sellers. So guys, I'll have to wrap it up here. Sorry that I had to rush through this one a little bit, because my colleague right now is jumping into his video in German. So if you want to join that one, you can do, of course, by all means, guys. But I hope you have a fantastic trading day, guys. Stay safe, and I'll see you later. Thank you very much, and bye-bye.